Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're recapping the first 9 months of financial performance of both our local and international stock markets, and what a ride it has been. Over the first 3 quarters of this calendar year, there has been quite some very impressive performances, as well as some not so impressive performances. So let's take a look at what's been happening and what we can expect in the final months ahead for 2019. Turning first to local and regional markets, and particularly the Trinidad and Tobago Composite Index, it's been up just around 7.5% on that blue line there for the first 9 months of the year. Now, that's been driven in large part by performance of the cross-listed index, or the CLX, in that green line there, up around 17.7%, and to a lesser extent by the performance of locally domiciled stocks, as measured by the All Trinidad and Tobago Index in red, which did have a much more impressive performance earlier in the year, up around 7%, but right now it's up just around 2.4%. So there has been some correction in terms of local stocks on the Trinidad and Tobago Stock Exchange. Now, in terms of major movers for the year thus far, we see that LJ Williams B shares up 33.3%, NCB Financial Group up 22.4%, GMMB up just around 20%, First up 18.3%, and Massey up an impressive 15.9%. On the other end of the spectrum, Guardian Media Limited, or GML, led the decliners, down around 40%, 41% actually. National Enterprises Limited down 28%, TCL down 25%, NGL down 14.1%, and Scotiabank, or SPTT, down just around 8.9%. Now, internationally, it's been a little bit more positive, or a lot more positive, depending on how you look at it, with the U.S. stock market as measured by the S&P 500 up just around 18.7%. Europe has been falling closely, up around 13.2%, and Latin America and Asia have been up just around 3.9% and 3.5% respectively. In terms of Latin American stock markets, Brazil has been leading performance, up around 11.4% in US dollar terms for the year, despite corrections in commodity prices, but boosted by pension reform in that particular country. In Asia, China's stock market has increased just around 22% for the year, and is really supporting some lackluster returns across other markets, notably in South Korea, in India, etc. Europe has seemed to overcome all fears of a slowing economic growth, as well as concerns about Brexit, and has rallied just around 13.2%, as mentioned, with major economies such as Germany and Italy up in all double-digit terms. And the US, of course, has been boosted and supported quite significantly by a 180-degree turn in terms of interest rates, whereas 2 to 3 interest rates were expected for this year. There have now been 2 interest rate cuts, and there are prospects for a possible third before the end of the year. So certainly the interest rate environment helping stock markets overall. Now, what can we expect going into the final quarter of the year? Well, locally, the completion of the Sagicor and AQY acquisition, or transaction rather, will take Sagicor off, or should take Sagicor off of the local stock exchange, as well as the Barbados Stock Exchange and LSE AIM, with a relisting on the Toronto Stock Exchange. GMMB is expected to issue an additional 325 million shares fairly in short order within the last quarter of the year, and that's going to increase its total outstanding shares by just around 20%. And most importantly, locally, today is the presentation of the fiscal 2019-2020 budget, and all eyes will firmly be on the finance minister's presentation at 1:30 today. Tune into CNC3, of course, for that live coverage. Internationally, several drivers will continue to dominate markets. Slower global growth could weigh on stock market performance, as well as trade tensions and international relations. There have been some less than savory international relations between the US and several countries in the past few months. Lower interest rates, as we said, will be supportive, and US elections in 2020 is the wild card, as we see news, positive or negative, coming out related to the incumbent. Now, how do investors position for the final few months of the year? Well, with more risk to the downside, investors may wish to consider value stocks or defensive stocks, value stocks being those which have low price earnings multiples, higher dividend yields, and fairly good growth prospects. Defensive stocks in the international market, such as consumer staples, defensive healthcare, and utilities. In the local market, banking stocks tend to be one of the more defensive stocks in terms of stability of performance. Diversify by asset class and region. And of course, if you wish to come out of the market and take a breather, stay on the sidelines, move into cash, look at short-term investments. That's it for this week's edition. For more information, give us a call at 226-8773. Email us at invest@boursefinancial.com or check out our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.